What is going on, Alpha Hunters? Hopefully, you are having a tubular Tuesday because you most likely are not. If you were bullish going into CPI this morning, kind of definitely mentioned it yesterday. Expect selling. Expect selling. And we are currently down on the SPY right now about 1.5%. So there you go. Nice gap down. Look at this gap down. Take a look at that sucker. We've been a while since we've seen a gap down like that. 1.25%, 1.3% gap down. It's a pretty good one. A little bit of sell down there in the first 30 minutes, and then had a nice little rally there that lasted about an hour and a half or so, and then we've just kind of been rolling over ever since, back down to the daily lows. Um, SPY is actually not being totally bad today, actually, compared to some other things. But you can see pre-market, when we got that inflation data, just absolutely dropped like a rock. See, we were already down pretty good, though. See, how much were we down roughly? We were already down roughly 0.3%. So basically, we dropped like another 1% once we got the inflation data. And yeah, there you go. Anyways, that's how the market looks today. If there is some audio issues, hopefully there's not. I think I got it all cleared out. I had a software update on some audio software I use, so hopefully it's not a big deal. And you can hear me just perfectly fine. I think you can. I'm getting looks like I'm getting the right readings and stuff. Anyways, Qs. Nice little gap down here on Qs. This is not even a little gap down. We gap down pretty large here on the Qs. We gap down roughly 1.85% here on the Qs. We traded down very briefly there on the open, down a little bit over 2% on the Qs. You can see, though, the Qs were actually kind of strong at the open. Nice. I mean, at least they didn't sell down. I mean, they at least traded higher there first 20 minutes or so, sideways there for another 20 minutes. Then a nice pop there for about 30 minutes. And then we've been steadily giving it back here over the past few hours. So that's kind of the way the Qs look. And that's kind of impressive because considering the way Apple looks on the open, which is the second largest weighting now on the Qs, Microsoft overtook AAPL. I mean, they traded down there very sharply there in the first 10 minutes. So I'll probably add Microsoft to the list here as well. Probably need to be watching both of those since they have that much weight right now. IWM, also nice gap down here. IWM has gotten absolutely smoked today. So you can see the IWM actually down 3.35% there on the gap down. A little bit of trade higher there in the first 10 minutes and then just dropped for about 30 minutes. Just got absolutely wrecked. Just traded back down. How low did we get? We got down over 4% there on the IWM. Roughly 4.2% on the low. Nice little rally there for about an hour. And then we've steadily been, just giving it back over the past couple of hours here. DIA, man, this thing got wrecked on the open as well. They all got wrecked on the open, but you definitely see the trade down that it had after the open there for about 45 minutes. A little bit of a higher trade there for about an hour and a half, about an hour, I guess. But yeah, you can see how much the DIA is just absolutely just giving it back here throughout the past couple of hours as we are making fresh lows right there currently. So yeah, DIA not having a good day, and this has been the market that has been holding up pretty well. So the DIA giving it back pretty good there. RSP also gap down pretty huge, down 1.9%. Yeah, nice little gap down, trade lower. A little bit of a rise there mid-morning, steadily giving it back. Not as much of a movement here after that initial sell-off as much as the other markets, I guess, much of the other ETFs. So, yeah, that's kind of how they look on the intraday. RSP, man, it was looking really good yesterday. I mean, we were looking really good yesterday on the RSP. You're thinking, hey, maybe we're going to see some broadening out of the market rally, continue higher, moving average is going to continue higher, all of it. It was looking super good. Even I didn't think the RSP was going to look like this today. But this is not one that looks really good for the stock market. It's going to be a false breakout. People are going to recognize that. Going to most likely close below the moving averages, which is the first time going back to the middle of January. Not like super far back, but we do have a little bit more of a room to move, at least down to the 50, down to this low that we put in on February 1st. So it's not looking good there for the RSP. You definitely see some downside come in, which is not going to be a big deal. DIA, yeah, DIA just trading down from that open. This looks pretty good reversal type action. I definitely would like to say that, this little flat top type of area that it kind of had to put in here after it made new all-time highs probably would be the first spot it would probably come into. So somewhere around the 378 and a half area to 378 area probably would be the first spot. So probably a little bit more of a downside. Nothing crazy. IWM, nothing crazy from where it is now, but yeah, from the end of yesterday, it's pretty brutal just because it's already moved so much. But IWM, man, this thing, past the 3 previous days was just absolutely motoring higher. That inflation data that we got this morning was just wrecked this thing. Yeah, intraday doesn't. I mean, it's not as bad as the DIA intraday with that. I mean, basically at the daily lows right now, but this doesn't look great anymore. I really kind of thought we were going to make a run up to these highs. I'm sure a lot of people were kind of thinking that, especially as we got above kind of this little top that we put in late January yesterday. We were looking really sharp yesterday, but this is not exactly a great look. I don't think you'd want to be bearish right now. You're going to want to see how some things set up, but you might be seeing some bearish plays on the IWM kind of happening soon. Set up soon. Qs. Pretty good upper wick so far. A lot of people are buying into the Qs on the gap down. Makes sense, right? I mean, kind of mentioned it yesterday. Like any selling we're gonna get, you're gonna get dip buyers, and they try to buy into the tech today. We have rolled back over. It looks like we're gonna roll over here for the next couple days, maybe day or so. But I mean, I wouldn't imagine we get down to this low. Maybe we do kind of base around the 20 EMA. Maybe tomorrow when we see a little bit more selling come in tomorrow. But other than that, you're probably looking to start to be buying the dip on the Qs if we continue to a little bit of a breakdown, maybe like another 1.5 or so. Yeah, down to the 425 area. So yeah, it's I don't think you're going to be selling right here right now. There's no point. We were pretty extended yesterday. Pretty good reversal upper wick yesterday. So I think you're going to start to see people really buy the dip here as we probably approach that 20 EMA. SPY in between that 10 and 20 right now, probably like halfway in between or so. If it makes it to the 20 EMA, I mean, it's possible. I'm not going to say it will, just because the Qs is like so close to getting there, and obviously that's the most waiting for the SPY. So not to say that the SPY does or doesn't get to that 20 EMA, but it's going to be close because the Qs will be probably getting there. If we don't see a really good sell off by the close today, probably gets there tomorrow, and I'd imagine people probably buy it up. Probably see some bullish action as we go into second half of Wednesday, probably Thursday, Friday. And if that does happen, that's where you're going to be moving stop losses, right? We got them right now. They're probably sitting right below that January 31st low. So depending on how this kind of shapes up tomorrow, you're probably going to be moving them below that low tomorrow. So we'll see, we'll take a look at it tomorrow. But that would be most likely what you'd be looking to be doing. All right, let's take a look at the calendar. The reason why I'm going to take a look at the calendar is because we got that inflation data this morning. So the big news was it did not drop as much as what the forecast was calling for. Okay, so the year-over-year inflation data here. Let's just bring this up here. Year-over-year inflation data. Clear that. Get rid of log. There we go. So it came in at 3.1%. So they obviously have not updated this chart yet for January. But it came in at 3.1%. So back down to, yeah, basically this dot. This dot that we had back in November was 3.1%. So back down to that level. The forecast is calling for 2.9%, which would have been the first time under 3%. Obviously, we did not get that. But it was a drop from obviously prior month, the December number of 3.4%. So it's not dropping as much as what they were hoping or thinking. And here's the core inflation number. Now, this is probably the one that I would imagine is probably a little bit more concerning because it was flat. The actual number was 3.9%, so it was flat from December. And the market forecast was calling for 3.7%, so it would have been about right there. So nice, it would have been about a 0.2% of a drop off, and this is the one that is interest rate sensitive. This is the core number. This is why a lot of people pay attention to the core number when you're talking about the Fed, when you're talking about Fed and interest rates, because this is the one that they can impact. So the core number is very important as far as that goes. With interest rate sensitivity, this is the stuff that people buy, and with debt and finance with debt. So homes, autos, that kind of stuff. So, anyways, a little sticky inflation, and people have kind of been talking about that, but people want to stay bullish that inflation's going to continue to drop. Another thing we want to take a look at is the Fed Watch tool, because I would imagine that a lot of the outlook now for rate cuts may have changed. So we know March was basically going to be locked into a hold. You can see yesterday it was at 84%. Today it's moved up to 91.5%. March, let's see if there's big changes here in March. This is, I'm not in March. I'm sorry, not March. May. There is a massive, massive change here. So yesterday it was expected to come in. I'm just looking at this number really. For our current interest rate level, Fed funds level, the market was expecting 40%. It has changed by over 20 points. It is now up to 64.8%. So going from about 40% or 39% to 64%, I mean, that's a 24%, roughly 23.5% change in expectations of, of cutting, I guess. Basically, you can say cutting or holding, of a hold at that level. So, yeah, the market seems to be a little bit more sure that we're going to be holding in May. So this is what a lot of people have been saying. Like, we're not going to get cuts until we get later in the year, which is what the Fed was saying. But the market, some people have been saying we're not going to get cuts. There's no reason to, right? I mean, we're not seeing bad economic issues. There's no reason for the Fed to cut. But the market was wanting cuts. And now, even what month is this? June? Is this June or July? This is June. Even in June, we are expected to have. Yesterday was about 8%. Now it is up to 26.5%. So we have seen quite a shift of when we get the first rate cut to happen, that the market's expecting to happen. It has moved out basically to June, but the odds have shifted higher for a hold probability. I would say that's a pretty substantial move, in one day. So All right. Interesting. That is an interesting look at what the market's expecting of Fed for interest rates and Fed funds and stuff like that. So let's go take a look at some other things. But that is a big reason why you saw a huge market reaction today. VIX, get off the monthly. Get back on my chart settings. There we go. Ooh, look at that move on the VIX. So that's what you want to see on a move on the VIX. Like when we were getting these spike ups, back, in January, even some in December, like we weren't really. I think this is a, if I remember correctly, this is a fake spike. Anyways, like we weren't really selling off. Like we were down like a quarter or 0.5% on some of these high rising VIX moves. Like we weren't moving all that much. Like in the bearish direction on the market, we were down like a quarter, maybe a half, or maybe 3/4 on some of those moves. But that is much more of like what you would expect to see, being down 1.1 3/4% on a day. Like you expect to see the VIX up like that, so that makes sense. Anyways, we'll see what happens going forward. But yeah, the VIX, I mean, still not taking out that January high, so not really a big deal. Also, still the market's still kind of in an uptrend, not really a big deal either, even though it's having a pretty bearish day today. It was pretty extended, kind of pulling back to moving average, not really a big deal. All right, so we're getting into dollar and yield territory here. So dollar and yields, man. DXY, very nice basing pattern here. The previous 4 trading sessions, kind of was just going sideways, waiting for that 10-year yield or 10 EMA moving averages to kind of come up, support it. Look at that break higher. It's a pretty nasty break higher. Kind of mentioned like, hey, it looks like it's basing here. Got a quick breakdown yesterday. Checked into that 10 EMA. We didn't even flicker below yesterday. Like it was just. Let me look at something here. I guess we were going kind of bearish right before we got CPI, but you can see when we got that CPI, like we didn't even flick lower. We just climbed. So the fact that we didn't even flick below yesterday, like we're probably just moving north on the DXY. So I would imagine we probably do end probably up towards the high of the day today. We'll probably continue to push higher on the higher here on the DXY and the dollar. And notice where we are. We're right here, which means if we end at the high of the day, we're probably going to continue tomorrow bullish, which means we'll probably come up to the 105.5 level or so. And this is the level I kind of mentioned a couple of weeks back. We're probably just going to make a move to this level because this makes the most sense. We probably have more resistance here at this level. Then we'll set up probably a little consolidation, and then we'll see what happens. Will we consolidate and then push higher? We consolidate and break down. We'll find out, but I would imagine we do probably just push up to that mid 105 level, and we'll see what happens. Gold breaking down. I would still just be buying any kind of dips here on gold. That's really all I'm going to say about it. Where are the long terms at? So kind of coming into the 100 moving average here now. Yeah, you're probably just going to be looking to buy. Continue to just be buyer here. It might have a little bit of sluggishness kind of maybe here tomorrow on the GLD and gold. But other than that, just continue to be bullish. Don't worry about any like major downsides. It's not going to have major downsides. Really isn't. So anyways. GLD looking okay. Yields. All right, so here's the other one. This is the granddaddy. Yields were looking pretty good. Very nice compression under this 4.2 level. This is going to be very important for the end of the week that we hold above 4.2%. Because if we get back below it, it's going to look like a big upper wick false breakout for the whole week. I don't think we're going to have any kind of inflation data the rest of the week or any kind of like economic data that's really going to possibly push yield and dollar to make them change course of what they did today. We're going to get PPI on the 16th, which would be, if I can do math, Friday. I don't think that will do much. I mean, Yeah, I don't think PPI will do that much. Not I don't think it'll impact the market as much as CPI just did. I'm gonna go with that statement. There we go. Anyways, yields. This is the one area of the market that um if we see yields climb and get back over 4.5% and start to make a climb back up to 5%, I think we'll see some really big issues with equity value, with equity pricing and fund flow. Anyways, we'll talk more about that if we approach those levels, but I'm not gonna get into all that. Do we probably push higher in yields? Yeah, probably, but it's not going to go just straight up. 10-2 inversion, nice little drop off there today. So, okay, let me take a look at the 2-year. How much is it? So the 2-year's up a lot. 2-year's up 3.9% on the day. The 10-year's up 2.9%. So yeah, 2-year looking really strong. Wow. Okay, so yields, all of them doing really good. HYG, talking about bonds though, bond prices at least. Kind of mentioned this, we've been consolidating kind of sideways here. Kind of had lower highs coming in, and then over the past couple of weeks had some higher lows kind of coming in. Consolidation sideways. This is a pretty nasty breakdown. Haven't really closed below this low that we put in back in the beginning of January, but definitely under that 50 EMA. Where's the long terms at? Oh man, there's so much room between our current price and the long term, the 100, 200 moving averages. So yeah, we could see the breakdown probably tomorrow, and man, that's brutal because it is like trying to hold on to that level that it's currently at right now. Not looking great. So we'll definitely see some big breakdowns on the LQD and TLT, and there it is. LQD, big time breakdown. Last week this thing was breaking down pretty good. Last Thursday was a big breakdown day. Friday held below. Monday just held below, and then there you go, just a huge breakdown. So LQD not looking good. Probably going to be moving much lower. At least it's got the 200 and then the 100. It's kind of in between it all. So let me see something here. From the low that we put in October to the high, that would be roughly a third of a pullback, a little bit over the third of, well, it'd be about 40%, 45% of a pullback. We get to the 200, 100. Most likely would probably come down to this level down here. That would be the golden pocket area, because that's also where we bottomed here back in August before we had the big breakdown. So that might make sense as well if we don't continue lower even later on. LQD though, not looking good. TLT, pretty good breakdown. Tried to base here twice. But yeah, not basing there anymore. Now we have lower lows, lower highs, and that's not looking good. At least you got the 100 right here, so you probably get a little bit of a pause there. Also had a little bit of a previous pivot level here as well, about where that 100 is going to be. So not exactly the best spot to be trying to be bearish here on the TLT, but come down, you kiss off that 100 and start to set up maybe another little bearish move. There's not much in the way of structure or pivot levels down past that, right? You got this little one, you got this one that maybe a one-off here around 88.5 area, but yeah, other than that, man, there's not gonna be much after that. So all right, that's the way a lot of that stuff looks. Let's take a look at sector rotation, because it is gonna look a wackadoo today. Oh man, it's gonna look crazy. You got this huge gap. Tech was strong early on, so it's gonna be all sorts of nuts. All right, so here we go. So for the energies, the XLE really gap up. Wow. All right, so the XLE actually gapped up a little bit, or at least traded, at least wasn't gapping down all that much. What got hit strongest today? Obviously, real estate has been hit the hardest today. Discretionaries have also been hit pretty hard. Utilities, you can see utilities actually sold off there. Pretty strong sell off there mid morning. Wow, or is that utilities from the open just got hit pretty hard. So XLU got hit really hard there on the open. Tech obviously underperforming pretty good today. Financial underperforming. Materials underperforming. Okay. Outperformers: XLC Communications, Industrials, Staples, Healthcare, and Energies. Okay, let's take out the gap and see what things have done. Yeah, utilities got absolutely owned. They got hit hard on that first hour and 15 minutes or so. Jeez, but XLU, the biggest underperformer intraday. Staples, financials, energies, materials, healthcare, all underperforming there. In line, kind of in with the market, industrials, real estate. Real estate just had a massive gap down. That's probably the biggest reason why they're underperforming. XLY, XLC, and XLK Tech. So tech, communications, and discretionary is actually outperforming pretty good there on the daily. That's what I mean. People bought the dip this morning in those names. You can see XLK actually trading higher there that first hour of the day. Even tech, even communications and discretionaries, actually not selling off as much. Like all the other sectors selling off. Those big tech sectors, they actually weren't really all that much selling off. They're kind of bullish there in that second hour of the day. So, yeah, that's what I mean. Buying the dip, man. Those have been the hot runners. People taking the opportunity to get in on any little pullback.